People think I'm crazy. People think I'm crazy to say that Bitcoin is a store of value when it can drop 80%, 70%, several times in just 10 years. How can a store of value fluctuate that much? How are you storing anything when in bad times you don't get much for your Bitcoin? And on top of that, you can buy nothing from Bitcoin, right? You can't use it really as a payment mechanism. Nobody accepts Bitcoin. Now let's try to look beyond the volatility and let's look at a store of value over the decades. Is there actually more adoption happening? Are there people that hold Bitcoin over the long term? And are those 70, 80% price drops happening because most people are scared and sell during bad times? Now here's a chart that might not look good on the surface of it, and that's the number of addresses that hold at least 1,000 Bitcoins. So in black we've got the Bitcoin price, and in orange we've got the number of wallets with at least 1,000 Bitcoin. So that's the scale here on the left, and this is declining since February of 2021. Pretty much no growth in the last 3 to 4 years. Now is this bad? It would be bad if we see a similar situation in smaller wallets. In other words, Bitcoin gets concentrated in a very few extremely rich hands, and so the wallets that hold 1,000 Bitcoin can't grow. But what we're actually seeing is that the small wallets, the number of those small wallets, it is increasing. 1,000 Bitcoin, that's 30 million US dollars. That's a lot of capital to hold in a single wallet. But let's look at retail. Let's look at the number of wallets that hold at least one Bitcoin. This is steadily increasing. It just currently crossed the 1 million mark. So 1 million wallets hold one Bitcoin at least. And say since the mania in 2018 when Bitcoin rose to 20K, that number grew by almost 50%, right? From 700K to a bit over 1 million wallets that hold at least one Bitcoin. Let's look at the even smaller retail, the people that hold at least 0.1 Bitcoin. So that's currently 3,000 US dollars. Also a very constant growth. And here we almost saw a doubling. So again, from the hype in 2018, 2.5 million to currently 4.4 million wallets. So fundamentally what this means is that more and more people get in Bitcoin and hold it. So the Bitcoin concentration, so to speak, reduces over time. And this is exactly what you want in a store of value, right? You want broad acceptance. Maybe not as a payment mechanism, but if there's more and more people that store their wealth in it, then they're also okay with buying it off of you. Now, price volatility is very different from that holder growth. We've seen Bitcoin prices crash 70, 80% all the time, while the number of those holders increases steadily. Where do those massive crashes come from? The answer is liquidity. Most people are not selling during a crash, rather the opposite. Most people are accumulating during a crash. Now, when people just buy the Bitcoin and lock it up in their hardware wallets, it's not freely available on exchanges. And so the fewer Bitcoin there is floating around, the more a single order moves the price up or down. And so this chart over here shows how many percent, what fraction of Bitcoin hasn't moved in the last 2 years minimum. And this is currently at almost 60%, right? 55% or so. That's this scale over here. More than half of Bitcoin hasn't moved in the last 2 years. That's a pretty illiquid market, and it tends to become more illiquid in the future. What that means is that even though Bitcoin's price could go another 2, 3, 4x, the drawdowns that we see are probably not going to diminish in magnitude. The volatility of the asset doesn't decline proportionally to its size. It does decline over time, but not proportionally to its market cap. The market cap can 10x and the volatility can come down only 10%, simply because the illiquid supply increases as a fraction of all of Bitcoin over time. Bitcoin is bought in order to be saved. It's used as a savings vehicle. It's used as a store of value. Now there's an interesting website that visualizes the current Bitcoin supply. So one square is 1,000 Bitcoin. It's blockchaincenter.net/Bitcoin supply. 2.5 million Bitcoin are on exchanges. 1.3 million Bitcoin are zombie coins that haven't moved. since 2010. Then we've got the 1.1 million Bitcoin owned by Satoshi Nakamoto. So adding both of those together, that's 2.5 million. Pretty much inactive Bitcoin. The same amount that's currently on exchanges, so 5 million here in total. 0.6 million are in the Grayscale Bitcoin Trust, a huge number. 0.3 million are currently getting mined per year, that's the inflation. Then we've got a few wrapped Bitcoin that are bridged, so that's used for DeFi on the Ethereum chain. Sometimes it gets bridged over to other chains as well. We had the Plus token scam, we had the Mt. Gox hack with coins that could be released at some point. 0.15 million owned by MicroStrategy, another hack, 0.1 million, etc. Let's not get into this in too much detail, but this here is the interesting part. Look at this. I have to scroll further and further and further. What is this purple thing? It's the rest of supply in circulation. And then just a little bit left to be mined. Isn't this interesting, right? So we have all of those stories of Bitcoin with all of those hacks and holdings, etc. But overall, a lot of circulating supply that's simply just in the retail hands. They simply just continue accumulating. So I expect Bitcoin to continue to be volatile, but I also expect it to always recover from any bear market. Adoption continues to grow. Long-term holding continues to grow. And Bitcoin inflation is way lower than fiat inflation. So yeah, if you need your capital tomorrow, then Bitcoin is probably not the best place to park your money. Then simply just keep it in fiat and let it deflate. But if you're storing Bitcoin over many years, then the ups and downs that happen every now and then shouldn't worry you too much. Especially if you have a diversified portfolio, you own some stock, you own some property, and you own some Bitcoin. Volatility is still across asset classes relatively low. It is high within crypto, right? When Bitcoin goes up, then Bitcoin Cash goes up, then Ethereum goes up, but it is pretty low across asset classes. So just because Bitcoin goes up doesn't mean that your stock portfolio is going up or that your house is getting more expensive. And that's a great way to diversify away all of this volatility. You can stomach the volatility if you simply just own enough different things. Let's chat together on Telegram. There is a Telegram channel. Simply search for Bitcoin Strategy Channel within the Telegram app. There's also a link down below that you can click. Looking forward to chatting with you. Bye-bye.